We proceed still on VAT administration, value added tax auto assessment. But I will add it to VAT returns, to speak it from return, VAT automated assessment, automated assessment. I'll pick it from VAT return, because assessment is basically come from the return. So start with what we call VAT returns. So we need to understand that every VAT registered person, every VAT registered person is basically required, and required by the law that pertains to VAT, required to submit VAT monthly returns. To submit VAT monthly return. We say that the returns should be filed by the 20th of the following month. So every VAT registered person is basically required to submit VAT monthly returns, the VAT monthly returns to the commissioner, to the commissioners, giving the following details. So basically, when you talk about the monthly returns, if you go to the iTax, this information basically is in the iTax now. What are some of the details that you need? The sales that were made, purchases that were done. So one, we can talk about showing separately. One, showing separately. Tax rate. Showing separately tax rate. Total value of supplies. Total value of the supplies. Total values of the supply. Total value of the supplies. Total values of the supply. The rate of tax. The rate of tax. And we say amount payable. And lastly, the amount that we say amount payable for the supplier, during the month. Amount payable for the supplier during the month. That as we present the VAT return that is done basically monthly, we know that VAT should be filed on 20th of the following month. Some of the details we say the tax rate, value of the supplies, the rate of tax, and amount payable for the supplier during the month. The next is showing separately. We can talk about showing separately. For each tax rate, showing separately for each rate of tax, showing them in the iTax for each rate of tax, the total value of supply, the total value of the supplies, showing separately the rate of tax, the total value of the supply, and amount of tax, amount of tax. We have the amount of tax on that list. Amount of tax paid, amount of tax paid in respect of input, and output. That is in respect to the returns, basically in respect to return. That information needs to be provided. That information, where necessary, we say the number of, where necessary, that number of supply, where necessary that number, where necessary that number of supplies, where necessary that number of supplies were made or received, the supplies that were made or received during the tax period, during the tax period. The information that basically is provided on that is basically the information on returns that are basically made by the taxpayer. That is basically information that is made by the taxpayer. Then what happens on this information? We have what we call electronic filing, and that is the iTax. That this return is basically done on what we call electronic filing. When you talk about electronic filing, we need to understand that the filing should be done, filing of return should be done, filing of the tax should be done on iTax. That these returns that are basically done, that should be done on iTax. And we need to understand that NB, this is basically on what you talked about on penalties and interest. We say that any person who fails to submit, any person who fails to submit the returns, any person who basically fails to submit the returns, to submit return as required, is liable for a penalty of 10,000 or 5% of the tax due. So if you don't file the returns, automatically the system generates that you need to pay 10,000. But if you needed to pay and you do not pay, so the 10,000 will be compared with the 5% tax due, whichever is higher, or whichever is higher, 5% of the tax due, whichever is higher. So if this returns is not done, is not submitted as required, is not submitted on time, 20th has reached and you've not filed or you've not paid altogether, we say that the penalty should be 10,000 or 5% of the tax due, whichever is higher. So that is basically comparison. We look at 10,000 and 5% of the tax due. That is what the taxpayer needs to submit to the Kenya Revenue Authority. I want us to move to what we call VAT auto assessment. What we call VAT auto assessment. VAT auto assessment. What we call the VAT auto assessment. When you talk about VAT auto assessment, is a system based, system based on tax compliance. Say is a system based on tax compliance. VAT auto assessment is basically a system based on tax compliance solution introduced by the Kenya Revenue Authority. So when you're told what is VAT auto assessment, is a system based on tax compliance, based on the tax compliance solution introduced by the Kenya Revenue Authority. that is basically in the 2019. What is the value of the VAT auto assessment? So basically, with the value it seeks to detect, it seeks to detect what we call detect inconsistencies. It basically seeks to detect the inconsistencies, anomalies when it comes to VAT filing and VAT in respect to refund. It basically comes to check those inconsistency between purchases, between the purchases and sales invoices, between the purchases and the sales invoices. It basically comes to seek inconsistency, that is between the sales invoices, declared invoices, declared in the VAT return, That is the purpose of the VAT auto assessment. Basically coming in to seek, it seeks to detect inconsistency, that should be anomalies in purchases and sales that are basically declared in the VAT. The inconsistency, after detecting the inconsistencies, are then communicated to the buyers and sellers, are then communicated to the buyers and sellers. This inconsistency or the anomalies we know are basically then being communicated to the buyers and sellers, and auto assessment are raised, and auto assessment are raised on outstanding inconsistencies, are then raised on the outstanding inconsistency. And then what we call auto assessment are raised on outstanding inconsistency, outstanding inconsistency. I want to talk about what we call legal implication of VAT auto assessment. Legal implications of what we call the VAA. VAA means VAT auto assessment. VAT auto assessment. VAT auto assessment. Legal implication of the VAA, or what you call the VAT auto assessment. What is the law as pertaining to the law? What is the legal implication? Number one, legal implication, we know that this is provided assessment by procedures, tax procedures. Basically, know that tax procedures of 2015. This is basically indicated on the tax, indicated on the tax procedures of 2015. So one of basically indicated that it means that it can be challenged. This basically means it can be challenged. It can be challenged. We say that through a set. It can be challenged basically through a set dispute resolution process, through a set dispute resolution process. Basically, this can be a challenge through a set dispute resolution process, like any other assessment, like any other assessment. So this auto-generated, a system of compliance, basically envisioned by the tax procedures, we say indicated, but basically envisioned by the tax procedures of 2015. We say just like any type of assessment, the VAA, it can be challenged through a set of dispute resolution process, just like any other assessment. Remember, when you talk about assessments in general, one of the avenues that we challenge assessment is we can challenge assessment maybe through the Commissioner of Domestic Tax. We can challenge this assessment through the tax tribunal. We can also challenge this assessment basically through the courts. So how does the process work? So you can say the current process of challenging tax decision involve the current, we say that the current process of challenging a tax dispute involves, currently, when you want to challenge a tax dispute, basically it involves a number of things. One, we can talk about lodging a notice of objection, lodging, number one, as common lodging, lodging a notice of objection or objection within 30 days. We say within 30 days, within 30 days of the receipt. We basically call it the receipt of assessment. Lodging an objection within 30 days upon receipt of what we call an assessment. Saying that I do not agree with this assessment that have been done. So you lodge that notice. That is one of the characteristics of a valid objection, what we call a valid objection. So we can say lodging of appeal and appeal document, lodging of appeal, what we call lodging of appeal, and appeal documents in the tax tribunal, what we call the tax tribunal, in the tax tribunal, lodging of appeal and appeal documents in the tax tribunal. We always say that when the commissioner is not able to give you a fair hearing, as a taxpayer and VAT taxpayer, you can lodge your appeal in the tax tribunal. And lastly, you can say lodging of appeal at High Court, called lodging of appeal, lodging of appeal to the High Court. If you're not able to get fair hearing on tribunal, on the High Court, lodging of appeal basically to the High Court. If you do not get a fair hearing on the tribunal, you can decide to lodge appeal, and even the Court of Appeal, or even the Court of Appeal. So if you do not agree with assessment, especially even the auto assessment, what you call the auto VAT auto assessment, you can lodge appeal at those various levels. We say that the first level is basically at the commissioner's level. At the commissioner's level, if the commission is not able to get you, you can move to the tax tribunal. If the tax tribunal is not fair with you, you can move to the appeal to the High Court or even the Court of Appeal. But lastly, we have even appeal, appeal. We can talk about the ADRs. You can make appeal to the ADR. That is what you call alternative dispute. We call them alternative dispute resolution mechanisms. Alternative dispute resolution mechanism. You can lodge at the ADR, alternative. But they're much more not as formal as the court, and they're much easier, basically coming to repair the relationship between the taxpayer and the commissioner. That is the ADR. And you say that auto assessment are just like the normal assessment. And when you're not happy with them, we can start lodging an appeal. We make an objection within 30 days of the receipt of the assessment. We make it to the commissioner. If the commissioner is not able to hear us, then we can go to the appeal to the tax tribunal. We can proceed to lodging appeal to the High Court or even the Court of Appeal or even the Court of Appeal. And finally, we have the ADR, that is Alternative Dispute Resolution, which are more simple and more easy and coming just to repair the relationship between the taxpayer and the commissioner. That is how we basically tackle the VAT automated assessment.